Am I now?
Yes, sir.
So I'll run through some key highlights of quarterly results as well as quarterly financial results, which we have filed on 28th of October, and the brief presentation which we have filed on the same date. Our standalone revenue for the current quarter stands at 148.54 crore, which is roughly 38% higher as compared to YOY, same quarter last financial year. We have seen a good revival in the current quarter. Our non-COVID revenue has revived to the extent of 94% in the current quarter. Our current quarter COVID revenue stands about 48 crore. We have done about 2.76 lakh COVID RT-PCR investigations in the current quarter. As far as nuclear is concerned, that is radiology arm of Thyrocare Group, we have achieved a total turnover of 4.71 crore in the current quarter. There we could not see a good revival, but there is a revival up to the extent of 55% in the current quarter, YOY. Our consolidated revenue stands at about 153.25 crore, which is roughly about 37% YOY growth, which we have witnessed in the current quarter. Our Ebitda margins have improved as compared to the last quarter, where we have a significant impact on account of COVID. Our standalone Ebitda margin for the current quarter has revived back to a normalcy and currently at 42%. Our consolidated Ebitda margins are at the rate of 40%, which is traditionally our aim. We have done about 323,000 COVID antibody tests in the last quarter alone, which is significantly a good number. We have processed about 4.6 million samples in the last quarter. Our YTD numbers, let me throw a brief light on that. Our total consolidated revenues at 30th September 2020 YTD is about 209.52 crores, which is 225.97 crores. That is what we have said. We have seen a significant revival for the half year ended September 2020. At Ebitda margin level, at a consolidated level for the half year ended 30th September 2020, we are at 34%. This is on account of significant revival in the margin, Ebitda margin in the Q2, and we have lost much of our Ebitda margin in Q1. With this brief information about Q2 results, I'd like to pass it on to Mr. Arindam Haldar, who is our CEO, to throw a brief light on our Q2 results as well as what has happened in Q2. Thank you very much.
And good afternoon once more to all participants on the call. At the beginning, I would hope that all of you and your family are safe and doing well. I'm very pleased to share that your company has completed last quarter with superior business results with a healthy top line growth of 37% and an EBITDA recovering to 40% plus level. We have seen a strong recovery in the quarter from the pandemic-led downturn in quarter one, and this recovery has been particularly pronounced in the month of September, where our non-COVID business almost came back to last year's level. We are still not out of the pandemic yet, as you all know, and many countries across the world are seeing second or third peak. It's still unknown how India will behave because the slope of the peak in India has been quite prolonged, unlike many other countries. However, it will suffice to say that we believe that COVID testing will continue well into next year as well, even as more and more elections open up and the fear psychosis goes down and people go back to medical institutions. Testing for COVID will probably continue for some time, with non-COVID recovering month on month. Our current experience in the last 3 to 4 weeks of October also says the same. We are seeing the same trend that we saw in September, and a slow recovery on the non-COVID business is very much visible. currently we are focused on improving our operating metrics, and we are putting building blocks in place for ongoing superior performance going into next year. We have also added manpower at the operating end, and we are continue to do so, especially adding manpower to drive growth in future. We remain focused on our everyday business because in COVID has come as a learning to us that there will always be surprises. There will be surprises at a day level, week level, month level, or quarter level. We are focused at our operating level to make sure that we can handle each new surprises as they come, and we keep on improving our operating performance. I would like to conclude my opening remarks here by wishing everyone a very happy festive period, and would again like to remind all of you not to let your guard down on precautionary measures against COVID-19. Thank you. I would like to open the floor for questions.
Thank you so much, sir. With this, we will open the floor for Q&A interactive session. So participants, if you wish to ask a question, you may please press 0 and then 1 on your telephone keypad and wait for your line to be unmuted. I'll repeat, you need to press 0 and then 1. First question of the day we have from Rahul from Increase Capital. Your line is unmuted. Please go ahead.
Yeah, hi, good afternoon. Thank you so much for the call, and welcome Mr. Haldar to Thyrocare. Essentially, I had two questions. One is, if you could help us understand how do you look at the second half of the year in terms of COVID and non-COVID pathology. If you could, just break it up into three parts. Non-COVID pathology. Second is RT-PCR and antibody. General trends in terms of how are you looking at the second half, and what could be the volumes and realization. That's my first question.
Sure. So Rahul, thank you very much for your question and for welcoming me. While it will be difficult to give forward guidance on the next year, but as I told you, in the month of September, our non-COVID business, which is purely like-to-like, without RT-PCR or antibody, has come back in the month of September to the last year's level and is slowly inching up in the month of October. We believe this trend will continue to become better and better month on month. So that's how we believe our business non-COVID, which is purely like-to-like, will continue. In quarter two, almost 40% of our business has been from COVID. So most of the growth that you see in quarter two has been from COVID. As non-COVID business starts growing, it's fair to say that the percentage salience of COVID at an overall 100% will slowly come down. So that's what one can talk about the COVID and non-COVID part of the business.
So essentially the 3 lakh kind of run rate on an average for RT-PCR and antibody, does that continue, or you are seeing some downtrends into RT-PCR and maybe higher antibody tests going forward?
So it will probably be unfair for me, and frankly there is no expert in the world who can clearly predict which way COVID will go. And I'm hardly an expert over here. It will be very difficult for me to say which way COVID test will go and RT-PCR whether it will go up or go down. It will be very difficult to give a prediction. Yes, in recent times, in the last few months, our RT-PCR test has gone down a bit. That could be due to a variety of reasons. At an overall level, we are seeing positive cases going down and active cases going down in the country. Also, a large part of the test that the government is doing is of antigen test and less of RT-PCR. And each state has a different approach to doing this testing. So one has seen a slight dip in the RT-PCR test in the past few weeks. Whether the trend will continue, it will go up or go down, it will be difficult to give an exact prediction. But one prediction is sure that, our non-COVID business is recovering steadily month on month.
Perfect. And just lastly on this nuclear, the imaging business, essentially the business has recovered 55% as you said. So overall it used to do about 35 crores of revenue at 15% EBITDA. Just wanted to know over next 3 to 5 years, the long-term potential of this business. What is the revenue break-even point, and what is the peak revenue or a EBITDA margin one should look at, from an analyst perspective? Thank you so much.
So as far as nuclear business is concerned, Rahul, yes, we have revived up to the extent of 5%. As far as nuclear business is concerned, despite 3 of our centers were completely down, despite of the fact that one of our centers, which is at Coimbatore, we have shifted that machine, PET-CT machine, from the current location to a new location. And that is the reason why we have not seen a significant revival as far as nuclear business is concerned. As regards to the EBITDA margin is concerned, to a certain extent it is a fixed cost business because we have a CNC cost, we have center running costs which are almost fixed. As far as there is a growth in the top line, we are seeing a good EBITDA margin in that business. Going ahead, we have talked about this in the recent that we will not be setting up a new PET-CT center, and we will be ensuring and we will be seeing to it that our existing centers are coming to a break-even. As regards to the break-even, any center which is doing roughly about 10 to 11 scans a day is at a break-even. In fact, all our centers, all our existing operating centers, except the Bangalore centers, is at that break-even was at break-even level pre-COVID. After COVID, we are seeing a revival. We are seeing our Mumbai center, Gavadevi center, Jaipur center, or even Delhi centers already reached to that maturity level. So this is the update as far as nuclear business is concerned. One more thing which you have asked earlier, as far as COVID antibody test is concerned, as we have said in our presentation too, we have started COVID antibody test only in late June, and in the quarter ended September 2020 itself, we have done about 3.23 lakh tests. Now, most of these tests we have done for corporates. Corporates like TCS, Tata, we have done it for JLW, we have done it for Reliance. So this trend, we hope that it will continue in the near future.
Thank you so much. I'll come back in the queue.
Thanks, Rob.
Thanks for your question. I'll repeat, participants, if you have any questions, please press 0 and then 1 on your telephone keypad and wait for your line to be unmuted. Next we have Srinivas Sheshadri from Mirabilis Investments. Your line is unmuted. Please go ahead.
Yeah, thanks for the opportunity. So the first one clarification from the presentation is whether this revenue from the antigen test, is it included in the COVID number, or is it part of the regular testing number? It's slightly unclear the way it was worded in the presentation. So just wanted some clarification on that part.
Okay. Yes, Srinivas. The COVID number that we have talked about is an RT-PCR test only. We are not doing antigen test. So the COVID test numbers, volume and value that you see is for RT-PCR alone.
Okay. So what is that antibody number which would have been included in the regular testing numbers? If you can give some broad idea of that.
So, Srinivas, so as far as COVID, as Sir has clarified, our COVID RT-PCR numbers are only included in COVID revenue, which we have mentioned. We are not doing COVID antigen. As far as COVID antibody test is concerned, that is roughly about 14 to 15 crore.
Okay. And that would be
for those 323,000 tests.
Okay. And that is included in our regular testing numbers, right?
Yes.
In terms of the revenue breakup. Okay.
Yes.
Got it. Secondly, maybe if you can talk about, like you were, I think Dr. Velumani had mentioned that you'll be opening a center in Delhi, and there is some expectation of good kind of COVID volumes from that going ahead. Maybe if you can give some idea about that, and also the future plans in terms of having these larger centers or regional processing lab, as you call it, in some of the other cities. What is the plan going ahead from a medium-term perspective?
Sure. Yes. So as you rightly said, Srinivas, we have initiated in the month of October COVID testing in our Delhi facility. Our Delhi COVID lab is up and running. We have got NABL accreditation and ICMR nod, and we have started doing tests in Delhi already. And our plan is to make sure that we have COVID testing facility in some of our other larger regions as well, apart from Mumbai and Delhi. We are also expanding some specific cities, our zonal processing labs. So even in the city of Delhi, we are expanding our menu width, and we'll be having a zonal processing lab there as well, along with our COVID lab. And we are taking it one step at a time, and we are also looking at few other cities and the other regions of the country where we'll have a similar model shortly.
Right. And any initial trends on how the Delhi center is progressing in terms of taking COVID volumes?
So it started doing the business, and of course it has crossed our minimum expectation of volume. We are comfortable from a margin standpoint. Of course, it can do more. We are not at capacity, but it is still too early days for us to do that. But we are engaged on the same effort, and as I told you, we are adding to our manpower on the growth side to ensure that we sort of capitalize on the additional capacity that we have built up over there.
Okay. Sure. Last question is like on the receivables. Now, if I look at the way it has been trending, like it is more than double of what it was last year versus a top line growth of just 40%. I presume a bulk of the incremental receivables will be more driven by the government business where you'll be taking COVID samples. So if you could talk about what is the payment cycle of such a business and how we kind of can keep this under control with the COVID volumes being high as they are. So what are the efforts or what are the
I'll let Sachin answer. Your prediction is right. It is primarily because of government and RT-PCR test, but Sachin, just to add to that.
Yes, Mr. Srinivas, you are absolutely right. Most part of it is on account of government business, and most part of it is on account of COVID business too. And COVID business mostly comes from the government only. As far as the payment cycle is concerned, we anticipate it to be 60 days or 90 days. Already, as on 31st October 2020, already we have received some payment from some government. So we are hopeful, or we are very much confident that all our dues from the government will be settled within this payment cycle. In fact, you must be aware, we are already managing NC non-COVID business under a project called Aapti Chikitsa. There we have an experience. We already have an experience of collection, how to manage it, and we have a payment cycle of 60 days. And out of these sundry debtors which are standing as on 30th September 2020, about some 40% is from BMC, where we have a comfort or past experience to ensure that our collections are ensured in time.
Okay. So Sachin, the 40% you're talking about is the total outstanding from BMC for COVID, non-COVID, everything?
No. So the out of total outstanding as on 30th September 2020, about 23 crore is from the government business. Out of these 23 crore, about 11.5 crore is from BMC. Outstanding from the BMC as on 30th September 2020.
Okay. Sure. Got it. Okay. Thanks for answering my questions, and best wishes to Arindam on his news.
Thank you, Srinivas.
we have Shyam Srinivasan from Goldman Sachs. Your line is unmuted. Please go ahead.
Hi. Thank you for taking my question and good afternoon. And once again, welcome Arindam to the Thyrocare. So just first question on the overall strategy, and maybe even Dr. Velumani can actually chip in here. We have been run differently for so long, and we have now done a change in terms of a professional CEO from outside. Just want to understand what are the key strategies that Mr. Arindam, the new CEO, will have. Is there a way? Is there a change? Is this a fork in the bend in terms of the strategy for Thyrocare? Are we looking at B2C as a new revenue growth area? So just wanted the next 3 to 5 year kind of a strategy from a CEO.
Sure. Hi, Shyam. Thank you for welcoming me. I will give you my perspective on the same, and then if Dr. Velumani can add a few points from his point of view, that will be also good. So as I look at the business, and I have been looking at it quite closely over the last 6 weeks, it is but obvious that a fantastic business model has been created over the last 25 years with a very high level of productivity and efficiency. And that is the way the operating metrics look so very strong. With each of as the volume flows in, since we have been able to keep our costs down and keep our operation very, very tight, our operating margins becomes high. So as one understands, obviously I want to build on the same. I don't think from my perspective that the overall strategy of the company will suddenly do a U-turn or change. And obviously if nothing is broken, obviously we don't need to fix it. So we have a strong business model. However, what I am looking at is building on the further growth layers on a strong fundamentals. Few broad areas are as follows. One is some of the new growth verticals I'm trying to push further. So specifically, while we have done businesses from the growth side on multiple B2B customers, some channels like hospitals and polyclinics and IVF centers, I believe remains as an opportunity, and that is something that we are going to aggressively chase. We are putting our field team to chase the same. We also have a strong network of Thyrocare service provider or so-called collection centers. One is also looking at that channel strongly and seeing how do we increase that multifold as we are increasing our regional processing centers. Because as you know, one of the big drivers of superior service and thereby revenue is quick turnaround time. As we are expanding our regional processing labs in multiple cities, those becomes our cities of focus, and we are increasing depth in each one of them by going both to this new channels. One is a vertical of hospitals and of course the collection centers. And while we do that, our existing business, the B2B customers that we are extremely engaged on the same. We are doing further slice and dice to understand the efficiency of each one of them. We are breaking them up by various labs and trying to see whether same size should fit all, or should we have differential strategy between larger customers and smaller customers. And just to repeat, we are of course going to fuel and fund this growth by having the right quality manpower in the various areas of growth. So that's my very broad thoughts on what we are trying to do as I am still learning the business. If Dr. Velumani wants to add a few points to the same, I can leave it to him.
Hello, I'm heard. Hello.
Yes, sir, you are.
You're audible, sir.
Hello.
Sir, we can't hear you.
Now?
Yes, you're audible now.
I said in the end I will be summing up for all the questions. Please proceed with the next question.
Okay. So this is Shyam. So my second question, Mr. Randan, is just on antibody strategy. We have done like whatever 330,000 antibody tests. So as in the second half, as the unlock proceeds, how should one look at it from a reopening strategy for corporates, for housing societies? Do you think, I know you said that you don't know which test is likely to take precedence, but from a simple to execute, easier test to kind of administer, antibody scores a lot better than PCR. So just trying to get your thoughts around, how the unlock could happen. And we have heard several industries now starting to do for the reopening, do test every day. Do you think these kind of testing strategies could evolve over the next 6 months?
Sure. Shyam, so first of all, on the antibody test, while we have done about 3.23 lakh tests in the quarter, at an overall level, we have done more than 4 lakh antibody tests. So I thought I'll just place that number. We have done more than 4 lakh antibody tests till date, out of which little more than 3 lakh has been done in the quarter. And as you heard Sachin speak earlier as well, yes, as the industries open up, there could be more and more demand for doing antibody tests. One cannot compare a diagnostic test like RT-PCR with antibody because the focus of the two are very, very different. As you understand, antibody test is not a diagnostic test for COVID-19. It's more a judgment of whether the population at large or the particular sample size at large, if you're talking about for a corporate, whether they have developed antibodies. So from a corporate viewpoint, if a large proportion of their employees have developed antibodies, that much part of the population is safe to go back to work. It's more from an understanding of the same. Yes, we are seeing many corporates in the last quarter, and that is continuing into the current quarter as well, who would be, trying to, as they're opening, I'm trying to see whether, their employees have developed antibody. But just to remind, antibody doesn't tell you that whether you have COVID today or not. It just says whether your body has responded earlier to an infection and whether your antibodies have developed or not. But yes, we do see that trend continuing, and we are of course prepared in every single way. And as you rightly said, not only about being the simplicity, frankly, over the last 7-8 months, we have understood RT-PCR also pretty well. For Thyrocare, for us, RT-PCR doing is as simple as doing COVID antibody test as well. From a simplicity sake, I don't think we are saying one is simple over the other. We have developed our logistics system. We have developed our technician team. We have developed our lab to an extent that we can handle any amount of volume, either in antibody or on RT-PCR. But yes, given that it rides on the analyzer that we have built a 25-year-old business on blood tests. Given that antibody rides on the same blood test mechanism and analyzer, yes, it just makes it a lot more efficient to do more and more antibody tests.
Got it. Thank you. And if I can squeeze in a very quick last question on the wellness part. So Thyrocare again has built itself on the whole Arogyam packages. Can you just walk us through what's happening now in terms of contribution or as part of the non-COVID? Are you seeing that recovery come as well? And from a 2, 3, 5 year perspective, do you think wellness will now see a revival, not necessarily a revival, but the awareness levels on wellness will clearly go up? So do you think this will again come back to the fore for Thyrocare?
Yeah, so Shyam, as you rightly said, so let me start with the longer term prediction or the longer term my view. I believe that as we come out of the overall peaks starts ebbing and more people have antibody, or if vaccine comes, either way, and fear psychosis goes down and unlock happens, one change will definitely happen is people's attitude and aptitude towards immunity and wellness. So over a longer term period, I am very, very confident that population at large will be a lot more focused on getting wellness tests done, because COVID has taught all of us that if we are healthy from within, if our immunity levels are high, our body's capability of fighting this virus is far superior. So over time, I'm extremely confident that wellness will become in 4. Whether that happens in 2 months or 2 quarters or little longer than that, yet to be seen. Our business of Thyrocare has been built, a large part of the business is based on Arogyam, and we are seeing recovery on the same. We are seeing Arogyam recovery, and given that we already have a strong portfolio, over the longer term, as more wellness comes up, I'm quite sure as a company will be able to capitalize at it.
Thank you and all the best.
Thank you.
Before I'll take next question, I'll announce again. Participants, if you have any questions, you may please press 0 and then 1 on your telephone keypad. Next, we have Vikas from Focus Capital. Your line is unmuted. Please go ahead.
Okay. Thank you, madam. Mr. Haldar, I had a few business-related questions. The first one is our business model, especially on the pathology side, depends on air connectivity. And with so many airlines being non-operational, how are you managing the logistics part? That is the first question. The second question I had was, as part of our business model, we procure samples from franchisees, but the end customer is, and his or her data is owned by the franchisee. So would we, is it part of our strategy to somehow kind of own the end customer so that we can provide better, service maybe to the end customer? And the third question I had was, third and last question. So what could you just share some average prices of antibody tests and average prices of RT-PCR tests? Thank you, sir.
Vikas, thank you. I know you had asked 3 questions. Your first question was quite clear. You could repeat and question 3 in the English. I couldn't hear.
Yeah. So question 2 was, the end customer is owned by the franchisee, or at least the franchisee is the one who is interacting with the end customer, and whereas we are just procuring samples from the franchisee. So, as part of your long-term strategy, do you have any plans of reaching out to the end customers? And the third question was, I was seeking some the average prices of antibody tests and the average prices of RT-PCR tests. Was it clear, sir?
Yeah, sure. So I'll just repeat just so that we are clear. So one question was about air connectivity and our dependent on air connectivity, how we are. Second was something about our business model of going via franchisee and end consumer and whether we have any plans to have. And the third one was about the average price of CN and or RT-PCR. Correct?
Yeah.
Sure. Okay. So I will take up the first 2, and while Sachin, maybe you can just add on to the average price that we are getting on both of those tests. So in terms of air connectivity, your point is very, very right. When the pandemic-led lockdown was announced by Honorable Prime Minister on the 23rd of March, last 10 days of March and better part of April, we faced a huge challenge, and that was reflective in our business as well. Our business practically went down to nil or single digit versus what used to do in the same period last year. So it was very severely affected. But as we all know, progressively market has opened up, and today we are being able to ship samples from all parts of the country. So April was very, very bad. Over month of May and June and July, we have slowly started seeing recovery. Especially in the month of September, most of the sample deliveries are happening, close to normal, I would say, and that is continuing in October. So air connectivity today is not seen as a very big challenge. Of course, we have still not gone into full-fledged unlock, but as you know, more and more flights are opening up, even for commercial and passenger travel. Every week, more and more flights are opening up as well. So one is only seeing better days as far as air connectivity is concerned, and especially in the last 5 to 6 weeks, we have seen less of challenge due to air connectivity. Coming to your second point, while we are engaged via our franchisee and our partners to drive our business, we believe that that is also a very effective way of reaching out to our consumers, because finally a Thyrocare report anyway reaches the final patient. So and sometimes to drive a business model in a geographically distributed country like India, a franchising model can actually become a very superior and efficient model if you really have to expand fast. So as I said in my opening remarks and while answering question from one of the other persons, I did say that we are trying to increase our franchisee network in all the cities where we are now putting regional processing labs. Along with that, we also have our Thyro app. It's a small part of our business where consumers can also call and get their test done. So which is there both for COVID as well as for non-COVID business. It's a small part of our business which is growing at a very fast pace. But the salience of the business is very, very small to say in immediate terms whether it will swing the needle. There are larger opportunities available in going into some of the B2B segments which we haven't gone earlier, e.g. bigger hospitals, as well as increasing our franchisee network fast. We are engaged on the direct-to-consumer route as well, and that is seeing a very healthy growth. But I wouldn't say that in the immediate future that is going to swing the overall needle of the company. Coming to the average price, Sachin, can you throw some light?
So because as far as average price realization for COVID antibody test and COVID RT-PCR test is concerned, for the last quarter, if you are asking, COVID RT-PCR test average realization was somewhere in the range of 1,700 rupees, whereas for COVID antibody test, it was somewhere in the range of 450 rupees. But let me tell you, this is changing because as far as COVID RT-PCR test is concerned, the prices are regulated by the respective state governments. We have almost 27 plus states, and for each of the states, there are prices which have been defined, and these are changing almost like within 15 days, they are changing the prices downwards. Not only that, the prices which have been regulated by the government for home collection are different, for sample collection are different, for sample collection plus processing are also different. So to answer to your question, as far as average realization for COVID RT-PCR test is concerned, the current indicator for the quarter ended September 2020 cannot be a benchmark. It is likely to change further. As far as COVID antibody test is concerned, I have already said we have started at 600 rupees a test and we have reduced the test price further, and therefore the average realization was about 450 rupees. This is the prices. At the same time, the cost of doing these tests are also going down. So our margins to a certain extent we are maintaining in both these technologies or the tests.
Thank you, sir. Thank you for the update.
Thank you.
Next question we have from Chirag from DSP Mutual Fund. The line is unmuted. Please go ahead.
Yes, sir. Good afternoon. Thank you for the opportunity. So this infrastructure that we've put for the COVID PCR test, what does it mean for other PCR platforms like, tuberculosis or HIV? As you look at the next 2 years beyond the current COVID crisis, what does this mean for these other tests? Do you think pricing will come down? Will it expand the market? These broad thoughts here will help.
Sure. Yeah, thank you, Chirag, for this question. I think that's a very interesting and thought-provoking question. With COVID coming in, one thing that has happened is, technology called RT-PCR today is a lot better known, and not just for Thyrocare, it is known across India, if not the world, and a large amount of capacity, both between government and private labs, have been put up across. So yes, it is fair to say that given the supply or the capacity has been put in by multiple players and consciousness about DNA testing has also gone up. Various other tests on the PCR platform will be now available, and it is a question of demand and supply directionally. With a lot more supply being there and the consciousness being there, yes, it is fair to estimate that both demand will go up and prices may come down. And as long as there are volumes, and we have proven that multiple times over the last few decades, as long as there are volumes, as a company, we know very well how to manage our operation efficiently and maintain high margins.
Okay, fair point. And then on genetic testing, sir, how big is the pot today, and just the thoughts on the outlook, say over the next couple of years, whether it is neonatal or other tests that you may have expanded.
Sure. Our current profile of neonatal testing and other genetic testing is currently quite small. So at this stage, to say that how that will impact for Thyrocare's revenue in the immediate future will be difficult to say. At a very broad, India level or a segment level, of course, the gynae portfolio in general is growing. You can see the trend in the various IVF centers that are coming up, and neonatal and prenatal tests and overall gynae tests and the various markers at a broader segment, one has seen growth. But currently that segment is a very small part of our Thyrocare's business.
Understood, sir. And the last question, sir, in terms of volume split between your regional labs and the central lab, where was this 2 years back and where are we now?
Sure. So at the current level, the volume split, if you just talk about the volume, not the value, is almost 50-50 between the central lab and the regional processing labs put together. Value-wise, of course, the central processing lab will still be higher because most of the RT-PCR tests in Q2 has been done in the central processing lab. So this, of course, directionally, as one can say, has only gone up. Exactly how much was it 3 years back, we may not have the data right now with us, but directionally, it's fair to say that the regional processing labs workloads are going up. And this percentage, I'm quite sure 3 years back would have been far lower.
Over the next 5 years, do you foresee a need for a central lab? Any other location?
So as I said earlier, Chirag, we have put up a COVID lab in Delhi, in Gurgaon, and as we speak, we are expanding that facility to have our zonal processing lab, which will be like a mini version of our Mumbai lab. Not 100% match, but very close to that, having menu much wider than our typical regional processing lab. So we are already doing it. We are not talking about very long term in future. This is already work in progress and hopefully will come in place in the next couple of months. And we are deeply engaged along with the team to figure out where should be our next zonal lab. So that is a broader plan that we have, that we should have zonal labs in each of our 4 regions of the country. And then in some of the priority cities, we'll have regional processing labs. That's how the overall model will be developed.
From a volume capacity versus our central lab in Mumbai, sir, how big can Delhi be, say, 2-3 years down the line?
Difficult to give an exact projection of how big it will be. From a capacity building possibility, of course, we can build the capacity as big as Mumbai for the tests that they will be doing. But to say exactly how much will be delivered 2 or 3 years down the line will be difficult to say.
Okay, thank you.
Next question we have from Shanti Patel from Shanti Patel Investment Advisors. Your line is unmuted. Please go ahead.
Yeah. Sir, I just wanted to ask you, what is our market share in the organized sector, if it is possible to answer? And secondly, how many new collection centers we opened in the last quarter, and how many franchises have been added? That's all.
Sure. Thank you, Mr. Patel, for your question. So I'll take the second one first. So as far as our collection center or our Thyrocare service provider, as we call them, due to the lockdown and the COVID pandemic, most of our focus was not on opening too many collection centers. So in the past quarter, our opening of collection centers has been very, very few and limited. However, that is one of the future growth areas, and we are gearing ourselves. One of the sort of building blocks that I talked about, one of the two important building blocks is being able to increase these collection centers multiple fold. I won't be able to give you an exact week or a month by month plan on how many, because we are putting the team in place as well for the same. This will also mean feet on street to be able to add, but on a slightly longer term horizon, we plan to at least double our collection centers that we have today. So we are clearly focused on the same, but in the last quarter, we haven't added too many. Your other question, can you just repeat that once more, please? The first question.
How many franchises have been added? And what is our market share in the organized sector?
Market share, yeah. So as you know, diagnostic industry, there are no formal way, unlike say your FMCG or white goods where you have a Nielsen or IMRB who does those studies and gives very more or less sample-based authenticated market share. It's a little difficult for one to get a formalized market share in the diagnostic business, but over an overall industry estimate, between the large national diagnostic chains like ours and some of the little more organized regional players that you know, so between the regional and organized put together, the industry estimate is we are about 17 or 18% of the overall pathology market of India. Now, in that 17 and 18%, the national players will be roughly about half of them. And then Thyrocare will have a portion of that half of the overall market. So it's fair to say that the headroom available for all players as the overall consolidation happens and more unorganized players become organized, I see potential for growth for many years to come in if that trend happens. So that's my overall take, but very difficult to give an exact percentage market share of a Thyrocare because there's no formal estimates available.
Okay. And how many franchises have been added in the last quarter?
As I said, that it has been just a few handful. I don't have an exact number, but it has been a very handful because our primary focus in the last quarter was on ensuring we come out of pandemic, we ensure the logistics, keep the safety of our people while operating all the labs, and grow a sizable business on the RT-PCR and antibodies. So those were our primary focus of last quarter.
Thank you very much. Thank you, sir.
Thank you, Mr. Patel.
Next we have Sriram Rathi from ICICI Securities. Your line is unmuted. Please go ahead.
Yeah, thanks for the opportunity. Basically, one question was largely on the strategy part. Pre-COVID, basically in the last couple of years, our growth rate had slowed down to lower double digits versus 20% plus in the past. What kind of measures we can expect that the growth rate moves up further, mid-teens or above that? So, what we are focusing on, whether it will be like increasing the menu, the test basket that we are offering, and basically we talked about more tie-ups with the hospitals and IVF centers. So are we looking to increase the number of tests that we are offering towards the complex categories or something like that?
Sure. So thanks Mr. Rathi, for your question. Ensure that we keep up our growth going on COVID pandemic. Some of the steps that we are taking is, as you know already, we have increased a few regional processing centers. So we have more processing centers today than what we had last year. We have already done that, and we are increasing a few more over the next quarter. One is we will have a lot more processing centers. And as you know, once you have more processing centers, our ability to give those tests at a quicker turnaround time, so better service, will be enhanced. And especially for some of the customers, like hospitals and the clinics, a quick turnaround time is a driver of service. With a lot more processing centers, we believe that we'll be able to do that. We are also supplementing that with our field team. We did not have till now. Start giving a field team a medical institution so that we can have the benefit of higher revenue. So that is one area of growth that we are seeing. Second area of growth is clearly increasing the number of franchisees, the Thyrocare service providers that we have. We believe that there is a large headroom available there. And again, as we are increasing our processing centers, that gives us the ability to increase depth of our Thyrocare's presence in each of those cities and in nearby areas by having a lot more branded Thyrocare centers run by franchisees. So those are the areas of our current focus, which we believe will give us better growth in future.
Okay, got it. That's helpful, sir. And so secondly, in the past our strategy has been more on the pricing disruption. So will that continue, and how should we look at the average realization going forward?
Sure. So yes, so as you know that we have as a company been able to disrupt this market again and again. And despite doing the disruption, our business model and the efficiency and the productivity that we have developed, we have still been able to maintain our margin profile. So our overall strategy does not change. Even in future, if there are opportunities for getting higher volumes, we will be very much open and willing to disrupt the market further, as we have done earlier as well. But at the same time, we are extremely conscious on the price disruption that we do, how that gets higher volume, because at the end of the day, the volume leverage is a very critical component over here to be able to retain high operating margin. So yes, we will be looking at some kind of disruptions in future as well on a selective basis to ensure that we have higher volume throughput.
Sure, got it, sir. So lastly, on the antibody testing, assuming that it's a large part of it will be through corporate. So these are kind of like one-time kind of business, or it may be recurring part also in the medium term.
Well, again, jury is out there, Mr. Rathi, on how long the antibody stays in our body. All of us have seen expert reports which talks about anywhere between 3 months to 5 months. That's what I have seen. No one can really say, given the strain of this novel virus is so new, it is novel as one knows. So technically speaking, if it is between 2 and 5 months, if a corporate has done an antibody test, they should ideally repeat that test after 4 or 5 months to ensure that their employees are safe. But that is a corporate to corporate, what will be their philosophy. For us to exactly say what it will be difficult. But it's not a test that will get done every week or every month for sure. I think ideally some corporates should do it maybe once a quarter, once in 2 quarters ideally, is what I feel. But exactly how it will develop, only time will say.
Okay. Got it, sir. Thank you so much.
Thank you.
Next we have Rahul from Increase Capital. Your line is unmuted. Please go ahead.
Yeah, hi. Thanks for the follow-up. The second quarter business update talked about new facilities also being created for COVID at Bangalore and Calcutta. I'm just relating it to the capex number reported in the cash flow, about 13 crores for first half. Could you guide us what kind of capacities are we building up in Bangalore and Calcutta, and what would be the full year capex number you're targeting?
So, Rahul, thanks for your repeat question. As far as Q2 capital expenditure addition is concerned, that is only for Delhi COVID laboratory. We have not spent anything as of now for Bangalore and Kolkata. That also includes some of our spending which we have done for other than COVID business too, because our Bhubaneswar as well as Pune laboratory was also functional in the month of March, but we have not installed the analyzers at these locations due to COVID. As far as the capital expenditure per COVID laboratory is concerned, since we will not be going to invest in the place and we will be placing it on leased premises, and we will be spending only on fittings and equipment, it would not exceed somewhere in the range of 4 to 5 crores per location.
Okay, so what would be a full year number we should look at? Should be like 20 crores should be good enough?
So it depends upon whether when and at what, in what month or in what quarter we are going ahead with our Bangalore and Kolkata laboratory. As I have said, we have already started our Delhi processing laboratory and we are identifying a place in Kolkata. Bangalore, we have already identified a place, so it will be certainly in the range of some 15 to 20 crores.
Perfect. And just lastly, for the non-COVID pathology testing, basically you were talking about 4.5 million samples per quarter last year, in the third and fourth quarter. Do you see there will be growth on this number? So essentially, because of the unlock happening and people would have postponed some testing in earlier quarter, would you say a 20% growth kind of, number based on the 3Q and 4Q run rate is fair enough assumption? That's my last question. Thank you.
Sure. So Rahul, just to reiterate, our like-to-like non-COVID, which does not include RT-PCR or antibody, is, as I said, by the end of the quarter, which is in the month of September, came to the same level as a year back. And we are seeing a progressive growth in the last 3 or 4 weeks. And I believe this will further go up. Every month will become better than the previous month. So that's how I am looking at it. The non-COVID, pure without RT-PCR, without antibody, every month I believe the growth rate will improve as one goes through this period of unlock. And of course, the antibody and RT-PCR will add on to the same.
Got it. Thank you so much and all the best.
Thank you, Rahul.
I'll repeat, participants, if you still have any questions, you may please press 0 and then 1. So at this time, there are no further questions from the participants. I would like to now hand over the floor back to the management for their closing remarks. Over to you, sir.
Right. Thank you.
Closing remarks, I will request Dr. Velumani to please pitch in and give his closing remarks as far as the Q2 results and direction further.
Sachin, am I audible?
Yes, sir.
Hello. Yeah. Good afternoon, everyone. Thank you very much. Shyam Srinivasan asked me what is the new strategy using the new CEO. Obviously, I was answering all the questions in the previous call. Now the CEO has answers for all the calls. And also, I remember 2 days back, our Prime Minister was telling there is a double engine. I believe Thyrocare also has got a double engine. Call it double engine, call it co-pilot, whatever it is, Thyrocare intends to make a better journey. That's why we have inducted a new CEO. Though he has come from competition, he owned the last 25 years of business and answered all the questions. I was very happy to listen to that. Let me answer to some of the questions very briefly within maximum 300 seconds I will take. Mr. Rahul asked antibody COVID RT-PCR test will go up or down. I am sure even the health minister of the country may not know. And the country is ruled by 25 health ministers. They also may not be knowing. So it's very difficult to tell. The trend will move up remain as it is or go down, both for antibodies as well as RT-PCR. It's a very fluid, dynamic, unknown, uncertain space. Very difficult for us to give any prediction. Rahul also asked a question, what will happen to NHL's profitability capacity? Let me tell you, NHL business will be treated like a fixed deposit. In another 2 quarters, it will come to a steady state. We don't intend to put in more money into that business. We intend to milk out as best as possible the returns from that business. Please don't count NHL as equity. Count that as a fixed deposit kind of returns. And Srinivas asked the question that Delhi, Bombay, Calcutta, what are the loads, what is the plan and what is the strategy? Let me tell you, our business is a very fluid business, cloud business. Hyderabad coming to Mumbai or going to Delhi or going to Hyderabad is an option. So is for Patna. So there won't be any center-specific load growth. Country growth will be distributed to all the 4 locations. So there is no concern about a specific city area growth. Nationwide, if we are growing, we will be able to distribute the work. Now, the Shyam Srinivasan also asked the question, what is Arogyam, what is happening to that segment? I am very pleased to tell, post-COVID, home collections are going up, center collections are not going up. Why I am pleased is, I had lot of already feet on street business, less on walk-in patient business. So now I am seeing that I am having a capability to service at home much more capable across the country. Single largest player. All the online companies are our major customers. For all their needs, we are the major kitchen. Arogyam is moving up. Fortunate that 15 years back I created this brand. Today, wellness means it is more important. Let me tell you, there might have been many industries which might have got disrupted. Airlines is gone, 1,200 crores is quarterly loss for Indigo, which says that globally airline business is gone, travel tourism is gone, hospitality is gone. But I am pretty sure worldwide, pharmaceutical, hospital, diagnostic business is doing very well. Wellness, fitness, nutrition is doing very well. So for me, the double advantage is, one is diagnostics, another is wellness. Both put together is Arogyam. And I am extremely happy to tell, in the non-COVID business, all the remaining are not growing. Arogyam is growing, and that's very positive news for our own stakeholders that we are doing very well. Vikas asked the question, logistics is a challenge. Yes, from some parts of the country, still flights are not connected to Mumbai. So obviously there are challenges. Some geographies we have grown 300% post-COVID. Some geographies we are still minus 40%. So there is a challenge, and once all flights are in place, we should be seeing the non-COVID business doing very well. Now some question was asked about the ownership of the patient. Is it franchisee patient? Let me tell you, the ownership of the patient lies with the brand. 99% of the patients who receive our